management team, including anything from allocation to selection. Prior to that, she was a portfolio manager for Bank of America. She is a CFA charter holder with an MBA from Georgia State and a bachelor's from UGA. And then Chris Casdia is the Chief Compliance Officer. He has over 20 years of experience in the compliance management field. Prior to Homrich Berg, he worked for AXA Advisors, if I'm pronouncing that correctly, as a Chief Compliance Officer, and he was the Chief Operating Officer for the Woodstock Financial Group. Chris is a fellow KSU Owl, and he earned his bachelor's and MBA at Kennesaw State. So with that brief introduction, I believe Rachel will ask the first question, and we'll take it from there.
Yeah, so this is directed towards Ms. Lang, but feel free, Mr. Casdia, hop in whenever you'd like. So what made you kind of want to join the investment industry? What was your big motivation behind that?
You know, when I get asked this question, I had to, think back. I was interviewed a while back by a local industry magazine, and I realized that my interests actually stem from high school. My dad got me to invest in some Vanguard mutual funds. This was a while ago in the 90s, early 90s. And it was a great time to be in the stock market. So I put my money in these stock mutual funds and I saw it grow. And then eventually I actually let it grow and grow. And then I paid off my car. So I thought that was pretty cool to see, the growth and compounding effect. When I went away to college, I knew I liked numbers. I wasn't entirely sure I wanted a career in finance, but I like the stock market. I took an accounting class. I was a finance major going into it, but I took an accounting class. I thought I might go that direction. It was too boring for me. Then, graduated in finance, and then coming out of college, I had 2 job offers. One was a real estate analyst, and one was equity research. And I decided to go with equity research. Both of them seemed like good jobs. Equity research, actually, I was making a lot less money. I made so little money that I had to live at home with my parents coming out of school. But I really liked the girl I was going to be working most closely with. And it seemed like a lot of upward mobility was there. So that's where I chose my job and got my start of my career. And I think, the big takeaway when I look back at that is you're going to land where you have motivation and you have skills and you're a good fit for the organization, and where you see a growing organization. And, don't take a job purely because of monetary reasons, because at the end of the day, the money will come if you're, working hard and you're with a good firm. So that's what I would take away from kind of my beginnings.
Yeah, that's great advice. I think Luis is going to tackle the next question.
Yeah, so the second question would be, over the time of your career, how have you seen the industry change for women in leadership positions?
To be quite honest with you, there hasn't been a whole lot of change, unfortunately. But what I will say, and that's just in terms of, especially in the field I'm in, when I go to a conference for CIOs and look around the room, there's very few. And, I think it has to start, where you guys are, and have people realize the different opportunities within finance. Because I think a lot of people in the finance world think, oh, I need to go into investment banking. I don't know where they get this in their head, but, maybe you can make a lot of money there or et cetera. But there are a lot of different job opportunities in the finance world for men and women. And, I didn't even know of the different opportunities that were available. So I think it's good I'm always impressed when we get interns that know that they want to be a financial planner. I mean, that wasn't even a major back when I was there. So I think, going back to the women aspect though, I think even though there's not a lot of women in the industry, I think because it is more of a rarity, it has played to my advantage in some cases. If they're like, I'm on some nonprofit investment committees, and that was like a new thing for me. And they came seeking me out because they needed a woman, to represent. They understand the power of diversity. So I think while, guys have an advantage because, there is more leadership at, that level from males. And unfortunately for women, a lot of people just feel more comfortable with their peers. However, from the flip side, especially now with the attention on inclusion and diversity, I think not only women, can have some power from that, but also minorities. And so I would encourage, if you are a woman or a minority, to, really try to seek out and make opportunities for yourself from that, because I do think this is a great thing that's going on. That's not to say if you're a white male, you can't succeed. You will succeed as well if you work hard and, find opportunities for yourself. But that's being said, there are reasons that, women sometimes aren't at the top of organizations, as, they have kids and they want more balance, and that's fine. But, I don't know if you saw recently that the Citigroup's CEO is a woman. She just got promoted to that. And I was reading about her, and, when she had kids, she went part-time. And so I think it's a testament to everyone's path is different, and you got to do what's right for you at, any given moment. And what's, if you have a family later, you got to do what's right for your family, and it will all come. The money will come, the success will come. You just, keep grinding, keep working hard, find those opportunities and take advantage of them.
Thank you for the great advice. During the Q&A, I'll definitely follow up with something you said there. But I believe Rachel has the next question for Mr. Casdia.
Yeah, so we're going to pivot a bit. So Mr. Casdia, what made you interested in working in the compliance field? You have all these accolades in that field. Kind of what drove that interest?
So I got in the business. I wanted to be a stockbroker. Like the people of my time, we saw the movie Wall Street, and everybody wanted to be Bud Fox. And so my first job out of KSU was at Bear Stearns, and that was my plan, to be a stockbroker. I quickly realized that I stunk. I was no good at it, and I hated it. But I knew I wanted to be in the investment business. And one thing I observed early was that everybody in the firm was afraid of the compliance officer. And so I said, hey, so there might be something for me here. And when I saw an opening for a compliance role at another firm, I took it. Very happy I did. The right role for me. I became a student of the profession, and I still learn things every day. So long story short, I backed my way into it. And that's fine too. I had an idea of what I wanted to do and what I wanted to be. I realized it wasn't for me, and I pivoted and found something that I liked, still in the business.
Yeah, and I will say Chris is very good at his job, and it goes to show you that you're going to figure out what are your strengths and weaknesses and migrate to those things. So while, I didn't think at your age that I wanted to be a CIO, or Chris didn't think he wanted to be the chief compliance officer, but you kind of migrate towards what you're good at, I guess.
Yeah, and I think that speaks to kind of, you'll find what job you're really interested in. Give it a try when you're young and have the opportunity to, but like you guys said, you'll eventually find what you're supposed to do. So I think that's great advice as well. Thank you for that. I think Luis has got the next one.
Yeah, this is more of a general question for both of you, but how has the whole COVID situation impacted your role?
Yeah, I can start off. I'll start at a higher level, at like our firm level, and talk about sort of what we've been going through and the opportunities it's actually provided us. So, as you all know, back in February and March, the stock market was very volatile, and we were all hands on deck. I mean, we, just like everyone else, we had to pivot to, we were pretty much work from the office type firm. You could, we had the ability to work from home, but it wasn't something people did a lot of. And so overnight we were 100% at home, and the stock market was plummeting. Our clients were scared because, we're managing retirees' money. We're managing high net worth individuals. They've worked for this money their entire life and they don't want to lose it. So one of the things that we did successfully was touch all our clients. And so we called up every single client and told them what was going on in the market, what our take was, and really tried to just keep them calm and stay on plan, because the worst thing you want to do is sell out the bottom, and then you lost all that capital. So we held our clients' hand, and we kept our clients. And that's one thing that Homrich Berg is very good at, is retaining clients. And the other thing that happened is we're getting a lot of new clients. So we have business development goals. We want to grow our firm year upon year, so we can create opportunities for not only our employees, but also our clients, because we can, grow the depth of our team and resources. A lot of advisors like us did not touch their clients, and that makes people upset. They want to hear from your advisor, and they want to hear, what our thinking is. So I would say from that standpoint, it's been an opportunity for a firm to shine with our clients, to attract new clients. I would say from a, more specific standpoint, from, being an analyst, because I manage a team of 10, including myself. There's 10 on the investment staff. And, what we also did was really up the communication internally. So why we have 2 investment committees a month where we talk about asset allocation or changes of managers. And we upped that to every day during the height of the pandemic, because there was a lot going on in the market. So we were talking about everything that was going on. What are the opportunities in the market? Where do we maybe need to cut risk? And so we upped the communication, and we also were having calls every day with our client service folks. And those are the people, the advisors that are touching the clients. And we were also on the calls with clients, but generally, they were kind of on the front line. So we were constantly communicating with not only our advisors and our clients, but, just on the investment decision level, we were really upping things. So I think it kind of goes to show, in times of crisis, you got to up your game. I remember, sitting on my computer at 7 o'clock in the morning, not leaving until 11 p.m. So it was, crazy time, and I was glad when things settled down. But it really showed to the caliber of not only our organization, but our employees, that, they can really up their ante, when needed. And it really showed in terms of the client retention and new clients.
Thank you for that explanation. Before we move on to the next question, Chris, do you have anything to add?
Well, I think the question was, how did COVID impact my role?
Yes.
For me, it's a little different. A lot of my role is surveillance, and nothing really changed for me. I came to the office every day and did forensic testing. So there wasn't much of a change at all for me. If anything, we started using Microsoft Teams once COVID hit, and really using this tool to connect with our advisors who were working from their home. But outside of that, not much change for me.
Okay, very interesting. And Rachel has the next question.
Yeah, so this is for Ms. Lang. What do you think the biggest challenge and biggest opportunity is right now in the field of investing?
Well, it's in the market. I mean, you have record Fed stimulus, you have, record fiscal stimulus. So you have a lot of distortions in the market in terms of what is driving stock prices. I mean, in a normalized environment, fundamentals drive stock prices. But in an environment where you have the Fed driving interest rates to zero, and you have so much liquidity in the market that there really is no alternative outside of stocks. I mean, you have interest rates pretty much at zero. So even retirees are looking at, like, I can go into bonds at, 1% or less, depending on what it is, maybe 1 to 2%. If you're going into treasuries, it's much lower than that. Or I can go into stocks, and even just the dividend yield is higher. So it's forcing investors into riskier investments. And so that's driving the market higher, not, necessarily fundamentals. You also have a very interesting phenomenon around Fang and not Fang stocks. So, Fang stocks are roughly 25% of the S&P 500. Their valuations are, astronomical in some sense, but then in other ways, I would say they're high, but that you can rationalize some of the stocks, because if you've looked at their earnings, they are really off the charts. And so if you look at it, and I know you guys are, part of this investment fund, or a lot of you are, the PEG ratio, price to earnings to growth, their earnings have been, off the charts. So part of what we're looking at is, if Fang stocks stall out, which you saw that the last couple of weeks, you saw a little pause with, the tech stocks, though I think I haven't checked the market in the last, I guess it's down a little bit now. It started up, but it's an interesting phenomenon. And you also saw a rotation into value, into small caps. And so and then you've seen, the economy bottom back in April. You really saw things start pick up from, the economy. We believe we're out of a recession. You saw, horrible GDP growth in the second. We're going to see a huge pickup in the third quarter. And then it's going to be, higher than normal in the fourth quarter. So we're on our way in terms of economic recovery. The stock market has already anticipated that recovery. And so, stocks have gotten a little bit ahead of themselves. However, if you look at history, and this is a hard time to, nothing like this has ever happened before in terms of the amount of Fed stimulus and, overall fiscal stimulus. But, things have gotten a little bit ahead of themselves. You also have the phenomenon of Main Street and Wall Street. So you have, Wall Street stocks are at all-time highs again. Main Street, there's still more unemployed than there's been in, 50 years. It's coming down. So, but there's still a ways to go. So, we're trying to reconcile the differences there. We did make some moves into the credit space. So a lot of the fixed income securities, we saw a big opportunity back in March, and moved into that. And we we do a lot of private vehicles, so vehicles that are more illiquid. And so a lot of our clients' money went into these illiquid vehicles, buying credit securities that we believe had very attractive returns. So that's some of what we've been doing. I think though, right now you've seen a lot of that recover. So there aren't a lot of screaming opportunities in the market. So we're trying to evaluate right now, how do we feel about this recovery? We're waiting for another fiscal stimulus. Will Congress ever get their act together and push something through, or they're going to just keep fighting, until after the election? That's probably what's going to happen. And then, what's going to happen with the election? A lot of people are very nervous about that. And, I think you could talk to both sides. And we wrote a piece, and you can probably get it off our website, about, hey, don't let your political beliefs drive your investment strategy. And I think that's very important. A lot of our clients, if Biden wins, the world's falling apart. If Trump stays in, the world's falling apart. So, we definitely have opinions on both sides. But what we try to tell our clients is, what's going to make you money over time is sticking to your plan, staying invested, and, not having, things spook you in and out of the market, because there will be opportunities where we'll make allocation changes, but we would highly suggest not getting out of the market based on different whims. So that was kind of a long-winded answer that there's not a lot of opportunities we're seeing right at this moment. We did see a lot back in March, but I think we're trying to reconcile a number of things at this point.
Yeah, no, I think that is great. Thank you. And we're definitely in unprecedented times. So it's been interesting. Luis, go ahead.
So this next question is a little bit related, and I'm sure you're probably tired of getting asked this one, but how do you see the recovery after COVID going?
Well, we've said since the beginning that this is going to be a bookend recession. Started with the virus and ends with the vaccine. And now the timing of that, now they're saying we could have a vaccine, some are saying before November, some are saying December. But even if we get a vaccine, then it's going to go to the essential workers. It's going to go to the vulnerable to start, and it won't be really more mainstream until then. But I do think there's going to be some fundamental changes, from business travel. I mean, everyone's gotten so used to Zooms and Microsoft Teams that, is the travel industry going to be able to get back to where it was before? And that goes from, the aviation industry to hotels to conventions and everything that comes with that. So there could be, some permanent shifts with certain sectors. That being said, other parts of the different sectors in the economy, I do think they're going to be crawling back. And so I think it's our view that there will be, the recovery will occur, and it's going to be more drawn out because there are so many unemployed people. But if you look at, the monthly jobs reports that come out, a big chunk of those are still, on temporary layoffs. And so the question is, will these people get their jobs back? And, how does that play out? So the other thing is office space. So the real estate space is, what does that mean? And I've heard, varying views on office because, number one, people might just work more from home. And I do think there's going to be part of that. But the other part of it is, if you looked at a lot of these modern office buildings, a lot of people went to what you call like a trading floor mentality, where they are all like sitting side by side and on kind of like a trading floor, or, shoulder to shoulder, and that was for collaboration. So they got rid of offices and a lot of like the new hip office buildings. Now, they're saying maybe that wasn't the best idea, especially if we need to be socially distanced for a while. So now, there's one side because people might be working from home, there's less office space needed, but then if you want to be socially distanced, then you might need more office space. So I think it's going to be an interesting way it actually plays out in terms of the office space. But so to just kind of wrap that up, I do think it's going to be a, drawn out recovery. There's a lot of people unemployed. I do think there's going to be some transformation in, certain sectors. But I will say, also on the tech side, a lot of the big secular trends that were already happening have been sped up, like retail. Everyone was shopping online, but the pandemic has really pushed that trend way faster. And, you're going to see even more carnage in the retail space. So I think you're going to, again, see certain sectors have some transformation. It does seem like the digital side has really benefited. And I don't think it's going to quite continue the way it will, but I do think there's been quite a bit of kind of tailwind to the tech industry. Like Zoom, their earnings were unbelievable. Now, do I think people are going to Zoom as much once we get back to normal? No. I think we'll have Zoom fatigue. But I do think, certain sectors where like Salesforce or some of these where they buy a subscription and there's really no reason that they couldn't use the software after the fact, we'll have a tailwind there. So, so we're optimistic that, we'll be grinding our way back to normal, though it's going to take some time.
Well, that's a great answer. I really like the Zoom fatigue term. I'm starting to get that in school now.
Yeah.
We're going to shift it over a little bit more into advice for current students types of questions, and Rachel will start off leading that one.
Yeah, so this is for both of you guys. So what advice would you give to a current student looking to get into the investment industry or the compliance field?
Chris, I'll let you go first.
Into compliance. It's interesting. The only people that look to go into compliance that I'm aware of are lawyers. And a lawyer joins an investment firm to be in the compliance department. Or then there's other times like me where you go into the investment business to do something else and you back your way into it. So my advice, since everybody here is involved with SMIF, my advice would be just get in with a firm and pursue your interests and see if you like it. You might right now want to be an analyst, but once you get into a firm, might realize you want to do something else. There's plenty of other things to do in the business. There's trading, there's sales and marketing, there's investment banking, product distribution. But I would tell you, find a good firm and just get in and pursue your interests. A side note, earlier, Stephanie mentioned when she goes to a conference, she's one of the only females. In my business and my line of work, it's the complete opposite. When I go to a conference, I am outnumbered. The overwhelming majority of compliance professionals are female. Just interesting. So I think it's a great career path if you want to get into it. But start by just getting in with a firm and then pursue your interest from there.
Good advice. As far as, if you want to join the investment industry, like Chris said, there's a number of things you can do. If you want to have more of the analyst path, some advice I would give is one, maybe pursue the CFA sooner rather than later. When I got out of college, I worked a year, and then the firm I was at would pay for my MBA. And the girl who I mentioned I really liked, and we were working close. She was pursuing her MBA, so I was like, yeah, I'll do that too. And so I did my MBA, and then right when I got finished with my MBA, I started the CFA. And one thing I was thankful for once I got done with all that, and then once I finished the last CFA test, I'm like, I'm not taking any tests for a while. But one thing I was thankful for is by the time I had kids, I was done with all that. So at night, two things I would say. One is I could really focus on my career and my family. And when you're pursuing like your MBA at night, and that's the way I did it. I mean, that doesn't have to be your path. You can do it full time. Or, doing the CFA where it's a lot of, studying. It does kind of distract you from your career. So you're not necessarily, you're rushing off to study or go to class. And then once you wrap all that up, you can really focus on your career. And I will say those two, getting my MBA and CFA, I remember at my first job, I was, completing a lot of spreadsheets and, helping the analysts I worked for at the time. And I didn't really understand the big picture. So it really helped when you get an MBA and a CFA, it all kind of clicks. You understand the bigger picture and you can be more strategic. And then, at your job, you can, put it all together and really start, kind of climbing the ladder and being more impactful. So, that's one thing to think about, getting your CFA. Do you want to get a master's? I think you guys are ahead of the game because number one, you're on this call and you care enough about it. I don't know if you're required to do this because of class, but if you are, that's fine too. But, you're getting some perspective on, different careers and opportunities. So I would encourage you to, continue to talk to people and sort of try to figure out, hey, that sounds like it fits my personality, or, hey, that sounds really interesting. And talk to as many people as you can, and try to understand where you might fit in the best. And then when you actually pick your first job, if you can get into something that is a little more broad, where it's more of a training program, I always think that's valuable because you get exposure to a lot of things. And as Chris and I were talking about, what you think you might want to do to start may not be where you end up. And so, like I said, I was a sell-side equity research analyst, and I was there for 6 years, and I knew by the time I left, I did not want to do that. So, but there's certain parts of it I did like, and I got a good perspective that, helped shape, a lot of the way I do analytical work now. So talk to as many people as you can, try to get some credentials under your belt. What they give you good overall perspective and let you see things from a higher level, but they also get you the interview because, you have those credentials. And then from there, it's really up to you is to, work hard, continue to network. I always think that's a good thing is, try to meet people even once you get your job, do some networking functions, even if that's not something you like. Just keep showing up and it will be beneficial later. And you can still network at, in college. And, it sounds like a lot of you, again, are part of this investment fund, which is great. I bet some of your peers will go on to do great things, and, you will too. So it'll be interesting to see, what you guys are all doing in 10, 20 years. So.
Yeah, thank you. That was great advice from both of you. Something that we could all kind of take and implement into our lives. So
Rachel, there's an echo.
Oh, there is? Oh.
What?
Maybe is that better?
There's still echo for me.
Okay, I'll fix it. Luis try to do the last question?
Yeah, so I'll switch up this question a little bit, but I believe in the first question we asked you, you said something about creating opportunities for yourself. So how would you say minorities or women who are interested in getting into the investment field can create opportunities for themselves?
I think especially now where inclusion and diversity is getting more press, I think one, it's just going to happen. But I think if those are, good when you're doing research on firms, whether you want to get an internship or your first job out of school, read about these companies and see if you can find anything about that. The other thing I would ask is, when you're talking, like I said, talk to as many people as you can. If you have a firm that you're interested in, I think it's definitely a fair question to ask. Is like, has the management team talked about, inclusion and diversity being an important part of, when they make future hires, and how do you think about that? You don't want to necessarily be too self-serving, but I think it's a very fair question to ask in this type of environment. But again, it's not necessarily, you don't always know, I would say. Like, I think it's timing is great for people right now that, are a woman, minority, because, at our level, while our management team always talked about how we need to do better about women and minorities, we never really had an action plan around that. And the recent news and press and just dialogue that's happened in our world has really brought it to the forefront. And so now we have a diversity and inclusion committee, and we had a firm-wide Teams call to talk about it and see what steps should we take. And it's my hope at the management team level, which I'm a part of, is that we really hold ourselves accountable to doing that. And while we can't 100% say we want to hire 3 African American women or men in the next 3 years, well, you always want to pick the best person for the job, but let's make sure we at least interview a substantial pool to give them that chance. And I don't think we've always been that direct to make sure we're doing those things. So again, I think, asking questions, when you do talk to people in the industry, but sometimes it's just happenstance. And and really careers are, sometimes you're just in the right place at the right time. But I would say for those of you that fall in that category, I think, it's great timing for you. And hey, I'll take any good luck that comes my way. I always have. And, I don't think it's luck though. I think, you'll get the position because you deserve to get the position. So.
Well,
hopefully that was helpful.
Yeah.
Chris, do you have anything to add there? You're muted.
There we go. No, nothing to add. I think you hit the nail on the head. The first thing to do, really look or ask questions of the company that you want to interview with and see if it's a priority to them. And it is a priority for more and more firms today. Sorry, I had to jump in the car. I have to pick up a child, so I'm driving right now.
Well, I think that concludes the questions we had planned to ask you. So thank you for answering all those. And if any other members have any questions you want to ask, I believe you can click the raise your hand feature, and whoever the host meeting is will let you talk and unmute you at that time.
Josh.
Yeah, Josh, go ahead. You're muted. Unmute your mic.
Hello, you hear me? Yeah, so first I want to say thank you for coming and talking to us. But my question is, like, I know in your business, relationship building is very important, especially with your financial planning. So my question is, like, how do you guys, especially now being virtual, establish, retain, and build your relationships?
No, it's a great question because being an advisor is very personal. Fortunately for us, we have built strong relationships with our clients. So, like if it's someone like your best friend or someone you know well, it's very natural to get on the phone or Zoom, and you can kind of pick up from where you left off. I think where it is a little more difficult is with newer clients that you haven't really, established that relationship yet. And so personally, I think when you're able to see one another, at least, Zoom or Teams, I think that's helpful. I also think really just when you're on the phone with clients, listening and really being really picking up on what matters to them. So if they mention, a certain interest, like, I don't know, Georgia football, and then you hear about some new great recruit and you say, shoot them a note and say, hey, what did you think about that? Just so that you're listening, you're trying to establish a little more personal, rapport. And then if there's other things like, maybe there's something they're worried about in the market. And then you see a great Wall Street Journal article that kind of really lays it all out. So just being responsive, having touch points is great. And honestly, we have started to have clients come back into the office. We have a big conference room where you can spread out. If they want to wear masks the whole time, we'll wear masks the whole time. So it's really, up to the client. And, some are perfectly happy they're like, oh, we can do this Zoom thing or Teams. Let's continue to do that so I don't have to get in traffic. Not that there's a lot of traffic right now, but you get the idea.
Thank you.
Sure.
Yeah, great question, Josh. I believe Amitai has a question. Go ahead.
Hi. Again, thanks for talking to us. My question was, what are some of the qualities you look for in your intern applicants or your regular position applicants? And a follow-up is, once these people are hired, what are some skills you feel were neglected throughout school or maybe other opportunities that they need to work on once they get there to truly be successful? Thank you.
Great question. I would say, one of the things with the interns, I swear, I mean, these interns are incredible. Unfortunately, like this year, we didn't quite cancel our intern program, but we, went from they're with us all summer every day, and they do rotations around the firm, to a week-long kind of crash course and learning about HB. So it's quite different this year, but I'm always so impressed by those who know, like, this is really something they're interested in. And for example, I had a girl, she is a Georgia Tech, she was in school at Georgia Tech. A guy I used to work with said, hey, will you talk to her? She reached out, and, we were able to talk, and she was very motivated and very go-getter. I really think what you want to portray is that you're willing to work hard. You're willing to do anything. I think most everyone who applies is smart. And, some may have a little better grades than others or so forth. And, they're usually very motivated. What has turned off some people in the past is that, they think they're going to go from intern to CEO. So I think, just kind of keep your ego in check that this is an internship and you're willing to do whatever, but you want to learn and you want to, get something out of it. However, if you have to make copies one day, all day, you're willing to do that. And, that's just kind of the way it goes. And believe me, I've been there. So just that you're motivated, that you're smart, and you've done your research. I mean, if you're going to seek out an internship with a firm, read about the firm, read about the person who's going to interview you, ask them about, people love to be asked about themselves. Ask them about themselves. Ask them about, that award they got or whatever, So that's the advice I give on the front end. I would say skills, that might be lacking. I would say, on the investment side, and then we have the advisor side, it might be a little different in that people who love investments probably are very numbers oriented. And so it's hard to find people who, are good at numbers, but then good with people. And so, and, look, if you're not super extroverted, that's fine. But also just, knowing how to talk to people and you're comfortable. And, one thing I'd say is practice. I mean, I know that sounds silly, but if you have, a friend or a parent or someone willing to just kind of talk through it. So when you get in there, just take a deep breath and just be as comfortable as possible, because, you're going to hire people that, you feel like you could get along with and show some confidence and are really just willing to roll up their sleeves and work hard. So I would say, really that good with people aspect might be lacking on the investment side. On the advisor side, a lot of people who take up that career love, dealing with people. So usually they're more people oriented. Technology is great. Forecast, let people know how good you are with technology, especially like, I've been in the industry now, 23 years. And so, yeah, I can do most things in technology, but I'm not as sharp as I'm sure you guys are and all the, latest different technologies out there. And if you're great at Excel, really, hey, I can do all the macros, I can, whatever it is. So, anyway, so those are just a few things. It sort of depends on the role you're after and, typically where you're lacking.
Yes, ma'am. Thank you so much. I do have one other small question. Being a sophomore, a lot of places don't actually hire sophomore interns because they kind of know you're probably just going to use that to leverage a new position next year or something like that. As a sophomore, what's some advice you would try to give someone pursuing this field?
When I was in college, I did a couple free internships. So, it just depends if you have the time to do that. I think if you call someone up and, if you, the best thing to do is try to get an introduction to, if you have a firm you're interested in, if you can always offer, hey, I'm willing to work for free. And even if you are a sophomore, they're, would be more inclined to do that. So I would say, offer yourself up for free. And that doesn't mean it's like 40 hours a week. You could say, hey, I get out of class, at 11 o'clock on Tuesdays and Thursdays. I'd be willing to come in, for a half day those days and do whatever you want and just try to get some exposure. Because a lot of times, getting that first job, is about having things on the resume, and that you were kind of motivated enough to go out and seek out opportunities. So
Yes, ma'am. Thank you so much.
sure.
Yeah, thank you for that question. I believe Zach has a question next.
I do. Can you hear me, Rachel? Am I good?
Yeah, you're all good.
All right, awesome. Two-part question. One kind of comes from I was reading the article from 2019. In a time of what I would call kind of crazy price targets and some kind of out there analysis, where do you think that kind of natural skepticism not only comes from, but kind of plays a role in your outlook today as a CIO?
See, Zach, that's what I'm talking about. He did his research. Yeah, that was the article I got interviewed. Is that what you're talking about?
Exactly.
Yeah, so I was talking about how earlier, things in your career shape you for later. So I was talking about how I was a sell-side research analyst, and while I ended up not deciding to do that for my career, one of the things I learned being a sell-side analyst is that there's a lot of conflicts of interest. And Chris Casdia, being the compliance guy, can talk all about that. But, a lot of times there was this conflict of interest that the sell-side analyst would rate something a buy or, promote the stock and raise its price target because they wanted to get the investment banking business. They wanted to do the secondary offering or do the M&A for that company and earn fees, and the analyst would get, a big chunk of that. They eventually closed that down, but there is definitely some of that still going on. But so I was always skeptical of sell-side research because I worked in it and I knew the conflicts going on. Sell-side analysts, they have a lot, they know the sectors inside and out, so you can get a lot of good data. But when it comes to actually their ratings on stocks, I didn't put a whole lot of weight into it. So, that goes to show now my job is to pick managers, and whether they're mutual fund managers, ETFs, or private equity managers, private debts, all the whole spectrum of investments. What I'm looking at is what is their motivation, and is there a conflict here that makes me skeptical of their success or skeptical of their motivations and doing different things. So again, it's that your past can shape how you function going forward, and so that no job is a waste, and that you'll gain perspective for the next position. So hopefully that answered your question.
No, it definitely does. I mean, it makes sense that the skepticism kind of comes from being in it and understanding it holistically. So second question, I'm actually starting the education portion of my CFP in November. Wealth management is kind of one of those industries that's I wouldn't say niche, but it's difficult to kind of get into, especially given the current climate. I had a couple interviews, and there was a lot of big firms that kind of canceled their programs, so that kind of carried over into the smaller firms. Maybe what's obviously outside of, I'm already preparing to study, but what are some things, for people who are planning to be financial planners, maybe some stuff that they can do? Obviously you mentioned kind of offering yourself up, but maybe outside of that, what's some stuff that they could do to kind of start to pursue that?
Well, I think you're the right track with pursuing your CFP. So I think, what employers want to see is that you're motivated, that you're getting the education you need to be impactful. Also, you could, join different organizations that can help with networking. I mean, I'm also like, for instance, I gave a talk at the CFA Institute, and afterwards, I think the girl was in high school, came up and she had all these questions. And, if there's an area that, or a firm that you're particularly interested in, you know, just pursue it. Like, try to find people that know someone at that firm. LinkedIn is great. So go on to LinkedIn, and you can even just try to link in with the people there. And, you know, I've had college students, you know, say, hey, can I talk to you? And I would love to talk to every single one. And I try as much as I can. It's, you know, sometimes you can't, but, you know, even if it's like younger people, like, you know, someone on my investment team, hey, I just want to pick your brain, or a financial planner, you know, Chris Casdia went to KSU, you know, find somewhere where you have like a common ground or an introduction, and just talk to as many people that you can and say, hey, I'm really interested in this field. And the best thing to do is, after you do that, who else would you recommend me talking to? And they can probably give you a person that they could recommend. And it always is so much better if, like, you get a firsthand, you know, a firsthand introduction. Because if a friend of mine asks me to talk to someone, I'm going to. If it's a complete stranger, I'll try, but, you know, sometimes my schedule just doesn't always work to do that. So try to get an introduction, try to talk to as many people as you can. Networking is a great way to find jobs.
Great. Thank you for that. I really appreciate it.
Sure.
Yeah, Zach, great question. Luis, I believe you said you had a question earlier, so I'll let you kind of go ahead and ask that if you'd like.
Yeah, before that, if anybody has any questions before mine, to please raise their hand. I believe we're almost up on time, so I'll give that a few seconds. And if not, then we'll finish it off with this question. Oh, did I cut out?
Yeah, but now I can hear you.
Okay. So if no one has anything else, then I was curious to ask you, if you weren't in your current role right now, where do you think you would be?
You know, that's a good question. You know, would I be? I don't know. I think I would probably land somewhere in finance. You know, I originally thought I wanted to be an advisor. So, you know, working straight with clients, and my path kind of led me elsewhere. Also, like in college, I think I filled out some form that was like, you know, where do you see yourself in 10 or 20 years? And I think I wrote like portfolio manager for a mutual fund. But I really do like working with people. I think one of the cool parts of my job is I talk to, I think, some of the smartest people in the world. Like, I talk to all these alternative investment managers that they're finding really interesting ways to make money. And I think that's really cool. But on the flip side, I really enjoy when I get brought into client meetings and you actually are really helping people. You're helping, our clients aren't all, you know, fabulously rich. A lot of them are just normal people that, you know, they had good jobs throughout their careers, but they saved, and now, you know, they may have a couple $1,000,000 and, you know, they're retired. And so you're really helping them to retire and enjoy their life, you know, after work. So, you know, one other thing, I kind of wanted to be a college professor too, Govin. When I graduated from college, I actually applied to get my PhD.
We'd love to have you.
What?
We'd love to have you.
Okay, thanks. I applied to get my PhD. One of my college professors was like, "Oh, you should, you know, go get your PhD," because I wrote some paper or something. And then I looked into the business school professors, and I was like, man, these guys have the life. They have 5 hours of office hours, and we're teaching, you know, 3 hours a week. I was like, this is perfect. And they, you know, made a good salary. I know there's a long road to get tenured, so I know you pay your dues, you know, getting there. But I love working with younger people. Like when I was in high school and college, I was a swim and dive coach and a lifeguard. And I love working with kids. Though I think, I may go crazy at the like elementary school and middle school, but maybe in high school and college, I think that would be fun just to help people too. So those are a couple things that could have happened.
Well, I think it would have been great if you could have taught the middle schoolers DCFs that early. That would have put them ahead for recruiting. Chris, do you have anything to add to that?
So yes, on the question, what would I be doing today if I wasn't in my current role?
Yeah.
When I graduated from KSU, before I got the job at Bear Stearns, my goal was to be a college professor and coach the Kennesaw State golf team. That's what I wanted, and I wound up going to Bear Stearns instead. And so that's what I would, if I had my way, that's what I'd still be doing today. Yes.
Well, Professor Harharon, they're both after your job.
Exactly.
You got the best job in the world.
Dr. Kochman still
Well,
there?
see,
KSU?
to be honest, the part that is really exciting is working with the investment fund, because we founded it 10 years ago. Chris was there at our 10th year anniversary, and just the quality of the students and how much they grow in the process is just phenomenal. So this is the most rewarding thing right now. So you should come join us.
Well, I think that about wraps up everything. So thank you again to both of you so much for taking the time to do this. I know you're regularly busy, and during this time, I can imagine you're both extremely busy. So we really, really appreciate it. Rachel, do you have any last things?
No, just thank you so much. It's been a pleasure. I hope this has been as helpful to everybody else as it has to me. And thank you for Professor Hariharan for kind of spearheading this and helping us to set this up. So it was great.
Hey, I'm going to take a picture real quick. So y'all smile.
Oh.
All right, thanks.
The question is, though, did you smile? Because you were probably in the picture.
I was trying. I don't know if I did. Yeah, it's good enough. All right, guys, I appreciate it.
All right.
Thanks for asking.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
Day. Bye.
Thank you.
Thank you.